all in all, I've made 34 times my money on average. Compare that to the S&P 500 since 2002. I did a little bit better than the S&P 500, and therefore you should absolutely consider me totally buy.
Liar! You're nice, I like. Welcome back to Strongman Personal Finance. My name is Christopher Belli. I'm a certified CPA accountant. I'm a fake Boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we are going to roast the ever-living heck out of Sven Carlin. Yes, I'm from Transylvania. So in this video, once again, Sven Carlin, my hero, bashes index funds. Why? Because if you invest in an index fund, you won't sign up for his stock research. Yes, that's why he's doing it. And he says, stocks always go up. Really? Did I ever say that? Confirmation bias plus my investing versus the market. So in this video, he says some patently ridiculous, stupid, dumb stuff that I'm going to just absolutely shred. This video infuriated me. I had a good morning. I woke up. I was rested, fed my kids, chilling on the couch. Then this freaking clown pops up in my feed. And I'm not happy. So let's watch. Very nice.
Good day, fellow investors. Stocks always go up might be wrong. Let me explain. We just made a video how we might be looking at the lost decade ahead, certainly from real returns. Fly to Fly said in an interesting comment, nothing wrong with the comment, that dollar cost average into the S&P is easier than picking the right companies out of 1,000.
That's very true. It's actually very hard to find a company that's going to outperform the market. That's why the vast majority of active fund managers, and especially clowns on YouTube, underperform the index. It's not easy. If it was easy, everyone would do it, right? And then if everybody did it, the stocks they were buying would quickly become overvalued.
Okay, that's correct. It may not be the best, but picking the right companies is multiple times more difficult. I'm doing a little bit of both, but I'm significantly losing on my company's selections.
So the thing is, apparently this guy was probably listening to Sven Carlin, yes. And now he's getting absolutely freaking wrecked because, like I said, it's hard to beat the index. And what happens to a lot of people is they buy individual stocks, they don't really know what they're doing, they lose all their freaking money, and they eventually conclude that the index is the better way, which it is.
Nothing wrong with Fly to Fly, but I want to discuss whether it is correct that stocks go only up, and that sentence might actually come from the 40 years of confirmation bias that we have had, or from the long-term chart that stocks always go up, but then again people forget about these lost decades or two that happen here.
So it looks like in the long run stocks do seem to go up. Why? Well, people become more productive, we have better technology, the world becomes wealthier, companies' earnings become greater in real terms. That's why the stock market goes up. And I firmly believe in human innovation and our ability to constantly better our lives. And if you believe that too, in the long run, stocks will probably go up. You know what I'm saying? We could have freaking mega super ultra computers one day that can, calculate everything in 5 seconds or something, like whatever. We could have insane things in the future that we can't even imagine right now. They're going to make our lives so much better and make us so much more wealthier. And the companies that invest in that technology or own that technology are probably going to have crazy earnings. And the stock market, which reflects that, will go up in the long run. But they lost a decade. So what? Of course the stocks always go up, okay? Unless we have some major catastrophe and we just are doomed forever to be in massive decline. It makes perfect sense.
What is confirmation bias? Confirmation bias is the tendency to process information by looking for or interpreting information that is consistent with one's existing beliefs. This biased approach to decision-making is largely unintentional and often results in ignoring inconsistent information. So let me give you the opposite view on stocks always go up, and then you will have another piece of information to make your life investment decisions, because at the end of everything, it is about your money, your life, and your financial goals. Never
But stocks do always go up in the long run. You literally just showed us that.
forget that. Now, the first antithesis to what I have to say is that you are not allowed to ever say anything against index funds, and stocks always go up. And already there will be plenty of comments in the comment section below saying bad things about me, saying this or that, because that is the nature of the environment we are in, especially after a 40 years bull market where stocks, yes, did only go up. The issue is that
they actually only went up over the last century. He's so full of crap. And you know why people attack him? And I think they're starting to see his grift. Where an index fund provides vast diversification, lets you not worry about, picking individual stocks, saves you a ton of time. And while you're not going to beat the market, you're going to match the market. Whereas someone like Sven, he spends all freaking day analyzing stocks, and I guarantee you he has underperformed the market. Now, later in the video, he says he beat the market by an insane amount, which is 100% proof that this guy is a massive freaking grifter. And guess what, Sven? I don't think stocks always go up in the short term, okay? If we have a lost decade, I'll be happy because I can average in over time every 2 weeks and scoop up every stock in the world. And eventually, when the bear market or the flat decade ends, guess what? My stocks will probably go up. Oh, and another thing, you're only showing the S&P 500. What about VT, bro? I also own all the international stocks. So even if the S&P 500 is in a bubble, oh, I still win.
But at some point, I will unfortunately be right. And we can look at this chart and we don't know whether we are here or most likely we are here, and then we will have a lot of down, and this was 70% down in real purchasing power. That's something you don't want. But
let's go back. Okay, let's see. So let's say we're right here, right? And you got a 30-year time horizon. And you're just buying. 17, it's a long time. 17 years is a long freaking time, man. But if you just buy. Oh, look at this. 17-year bull run. That almost gets you to retirement, right? What is that, 34 years? This exactly proves my point. Why would you give a crap about if stocks were flat for 17 years, as long as you have the patience and you're not a bussy, and when you get a massive bull run after that, which I think will eventually happen. And on top of that, he's like, well, you could have a flat decade with the index funds. What do you think your individual stocks are going to do? Okay, do you think you can actually pick the stocks that are going to outperform the index? Because a lot of stocks that I've seen him talk about have been absolutely nuked, absolutely freaking destroyed. So don't sit there and tell me you think you can beat the index when it's flat, when in reality you're probably going to match it or underperform it, because the index is probably going to drag down whatever freaking individual stock you're investing in.
Power. That's something you don't want. But let's look at the fundamentals, which is again something that stocks always go up, people never look at.
That's a straw man, Sven.
If I look at the cyclically adjusted price earnings ratio, that is currently at 27, and compare that to the market. If you want to know what is the Shiller price earnings ratio of the cyclically adjusted price earnings ratio, is a price earnings ratio based on average inflation adjusted earnings from the previous 10 years. So it works around business cycles to give you a fairer explanation of the economy. 27, so if we look at historical data, when the CAPE ratio was at 27, the average real returns over the future period were around 4% for the various markets. That is...
But I know how to find the stocks that will outperform that. Oh, and you still haven't mentioned VT, Sven.
Not bad, but also not great. However, there were also times where for the S&P 500, the returns were pretty negative. And those were pretty negative long term, even for lower P ratios, let's say at 15. Everything above 15, you can see 10 to 15 years return be pretty negative. A few percentage points per year negative over 10 years is 30-40% down. So stocks
Not if you're dollar cost averaging, Sven. He's such a clown.
always go up is extremely dangerous in my point of view. And now comes the question, Sven, and have you beaten the market? Nobody has consistently beaten the market ever. It's not about beating the market. It's about doing good for yourself, creating good absolute returns.
I've heard him say this multiple times. It doesn't matter if you beat the market. If you can't beat the market, then buy the freaking market. Basically, he's saying, oh, well, I didn't beat the market, but it doesn't matter if I didn't beat the market because it's absolute returns. Dude, it makes no freaking sense what you're saying. If you can't beat the market, buy the market. If you think you can beat the market, then invest and do his freaking crap, okay? But at the end of the day, why do all the work and why pay for his research platform if you can't beat the market? It doesn't make any sense. Oh, it doesn't matter if you underperform the market because at least you did the due diligence. This guy is a freaking clown, okay? He's a doofus and he's a clown and he wants your money. If you can't see the grift this guy is perpetuating, I don't know what to freaking tell you. But oh wait, he's about to talk about his returns. Yeah, let's see.
For yourself, no matter what the market does. I don't care about the market. But as we are answering that question,
I underperform the market, so I don't care about it. Yeah, because I do all this time in research, put all this effort into researching stocks, and I underperform the market. Yeah, it doesn't matter, bro.
To get before your comments, started investing in 2000 to 2007. I made 5x then. Crisis, I lost 20%. That's 0.8x. 2009, I invested, I made 4, maybe even 5x on my money, including dividends, but okay. 2016, 2018, we were moving, buying a house, kid, this job, whatever. I did just 1.2 likely with Nefsun, but I made good money with the real estate that we bought back then. You can check this video if you're interested in that educational perspective, but that will not be included here because not in stocks. Then from 2018 to 2022, I made again 1.8x my money, and that has been documented on my research platform. All in all, I've made 34 times my money on
34x, bro. Yeah. He's lying. Okay, he did not get 34x. If he got that, I mean, I don't know how well the S&P has done, but probably not even close to that. I think he's saying that he's massively outperformed the S&P 500 by multiple times over. This guy is a liar and a grifter. Okay, he's full of crap. Go look at his old videos and see all the stocks that he's talked about. They've all been wrecked. It's all a bunch of lying BS garbage. 34x since 2002, over 20 years. If you believe what this guy is saying, you are full of crap. This is his grift coming out in full force, and I saw this a long time ago. Because most people that buy individual stocks, they're grifters, and they just want you to give them money. He's probably 34x'd off his freaking stock research platform, where his freaking clown investors have underperformed the market. I can't believe this guy is claiming, oh yeah, it's a 34x. Yeah, okay.
On average, compare that to the S&P 500 since 2002.
You cannot believe this. You cannot believe this is true. This is a lie. He's lying to you. This is a scam. At this point, it's a freaking scam. Okay? Oh, I 34x'd. I'm better than every single investor who has ever freaking lived. Yes, look at me. I'm so smart.
I did a little bit better than the S&P 500, and therefore you should absolutely consider me totally biased. So this is really the extreme of the picture. So you have to always see what best fits you.
Scammer.
So I'm just giving you this info as counter information to what is likely your confirmation bias.
Scammer.
And of course, S&P 500 over time, dollar cost averaging, buying when it goes lower, buying more. So if you are such an investor, you should be buying more of that freaking index fund now. Will do okay. You will accumulate wealth. Nothing wrong with that. But my issue,
yeah, you will,
with stocks, and let me know in the comments if you want me to discuss this in depth in one video, is the mindless approach to the, let's say, stocks always go up investment. If you don't think, you miss up on great life opportunities that are there if you think, and you don't just blindly invest in something, but you think, okay, this is the return now is likely 4%. Oh, here my return in life is 10%. What do I do? Those who think blindly do this and miss on the much better, miss the 5x in 20 years and the 20-30x, which makes a huge difference. That's the only problem I have with index funds. 5x is great for most people, but my bias is, okay, can we do better for our...
Oh, my bias is I can outperform the S&P 500 by like 6 times. 100% disgusting scam. This video is incontrovertible evidence. This guy's a liar, he's a scammer, he's a scumbag, and you should not listen to him. Sven, if you watch this, lick my nuts, boyo. Cheers!